Hey guys, welcome back to Reserved Investments on YouTube. So I'm often asked, Sean, what are some of the fundamental differences between investing in the financial assets, stocks, bonds, ETFs, mutual funds, versus investing in antiques and collectibles as a valid alternate asset class? Well, I'm going to do several videos on this, but the first point that I want to talk about in depth is the subject of diversification. Now, if you're in your 20s, you're in your 30s, you're in your 40s, and you want to create a sound financial investment and or portfolio, you're probably going to start investing in stocks, bonds, mutual funds, or ETFs. For the record, in my opinion, and remember, I am not a licensed financial advisor. I'm educated in business, I'm educated in finance, I'm educated in the antiques and collectibles trade, but I am not a registered financial advisor. I also don't know your personal situation or predicament. So this is just blanket advice in my opinion. If I was to start over again at the age of 20, I would do the exact same thing that I did at the age of 20 and invest in low-cost, index-based mutual funds and or ETFs. Now to be fair, I'm 43. Back when I was 20, ETFs really didn't exist on average like they do today. However, you can go into index-based S&P 500 ETFs or mutual funds. There's total stock market index funds or ETFs. There's even total bond index funds or ETFs that you can choose from. Diversification in the financial markets is very important. I would never ever advise a novice investor or someone new to the financial markets to invest in individual stocks or individual bonds. It's too risky. The behavior of the investor has a lot of influence on how those particular returns are calculated. Meaning, if you buy Dow Chemical stock and you pay $59 a share and something upsets the market and that Dow Chemical stock drops all the way down to $43 a share, if you don't have an iron stomach, you may be tempted to sell your holdings at a loss. Well, with mutual funds and ETFs, that same thing can happen, even if you own an S&P 500 index fund or if you own a total stock market index fund. The difference is the individual investor most likely won't sell the mutual fund or the ETF because if he or she has any type of financial education, they know that a mutual fund and an ETF is generally made up of a basket of different stocks and or securities that provides a hedge so that if it drops overall, it can easily come back up. Or if you invest in one company and the CEO of that company does something stupid or flat out wrong or immoral or unethical or illegal, that stock can drop and it may not go back up. That's why I state always that diversification in the financial markets is very important. Younger investors should be invested solely, in my opinion, in index-based, low-cost mutual funds and ETFs. They should not be touching individual stocks. They should not be touching individual bonds. Now, if you want to invest to diversify assets into like a total bond index fund, I'm completely okay with that. However, be very careful if you are going into individual stocks and individual bonds. That's very risky for a novice investor. Now, how does this differ from investing in antiques and collectibles? Well, I'm going to throw a ton of bricks at you, and I'm going to say that in some cases, diversification can work against you. What do I mean by that? Well, let's look at coin investing for a minute here. If you watch any of my other videos, you know I'm a fan of rare coin investing. I like going after coins that cost $2,000, $3,000, $4,000, $5,000, $6,000, $7,000 a piece, and I love studying population reports. I love studying market reports on all the information that a lot of the newsmatic media has to offer. I love studying coins. I love studying the marketplace for coins. Well, if you're going to take $5,000 to $10,000 and you're going to come into the rare coin marketplace, you're going to notice something. If you go to the marketplace and you look up certain coins that maybe only cost $500, $1,000, even in some cases $1,500 a piece, you got to understand there's a reason that those coins even in mint state 64, mint state 65, mint state 66 condition, only sell for $500, $1,000, $1,500. The reason is that's what the market kind of decided that those coins are worth. Now, that's not to say there's not sleeper investments in rare coin investing where you can go to the marketplace, you can find one of these coins that is selling for $500, $1,000 at present time. You do your homework, you do all the applicable research on that investment, and you go, hey, I believe this coin's selling for a discount in the market today. And you hold it for 5, 10 years, you go back to the market and you sell that coin, you may get $3,000, $4,000, $5,000 for that coin. On the flip side of the equation, you can easily spend $5,000 on a coin and you can go, aha, I paid $5,000 for this coin. There's no way this coin's going to go down in value. Then you can start doing all your research and a couple of years can go by. You go and you sell that coin back into the market and guess what? Well, you only got $3,000 for that coin that you paid $5,000 for. Well, what's happening here? That Sean guy through Reserved Investments, he said that he likes to invest in coins. Well, the coin marketplace must be a scam. I just turned $5,000 into $3,000. Well, Timmy Poindexter Jr., the marketplace and the rare coin marketplace is not a scam. You just didn't do the proper homework to buy the correct coins. So where am I going with this? It is sometimes better not to diversify in the antiques and collectibles trade. So if you have $10,000 to invest in antiques and collectibles solely, you are sometimes better off going to the market, analyzing the market properly, and going after the rarest, mintest, best specimen you can buy and put your money into. Because in the antiques and collectibles trade, here's a little tidbit of advice. I did a video many, many months back where I talk about the definition of an investment grade antique or collectible. The definition of an investment grade antique and collectible is simply an item that is in the top 15% of the market as a whole. Meaning, if we're going to study comic books, because I use this example a lot, if you're going to go after a copy of Giant Size X-Men 1, I really hate to tell you, a copy of Giant Size X-Men 1 in CGC 9.4 is not an investment grade comic book. If you don't believe me, pull out the population reports, look at how many copies of Giant Size X-Men 1 from 1975 are out there on the market graded in 9.4 condition. In order to be in the top 15% of the market for that particular comic book, you have to buy that book in 9.6 or better. This is something that a lot of people don't properly analyze, and it's one of the main reasons why a lot of first-time investors and Timmys and Poindexters out there that get involved in these markets get slaughtered because they think just because a copy of Giant Size X-Men 1 in CGC 9.4 is selling for $3,000, $4,000, well, that means that item is an investment grade comic book because the market's telling me that it's selling for $3,000 to $4,000. Well, ironically, you'd be better off going after a 9.6 Giant Size X-Men 1 in today's marketplace than buying the 9.4. The 9.6 has better investment potential because it is an investment grade collectible. It's no different when you get into the rare coin investing marketplace. I just bought, I'm going to announce this right now because you're going to see the coin when it comes, in the latest Heritage Fun auction, or the Long Beach, I'm sorry, it wasn't the Fun auction, it was the Long Beach auction that just occurred at the end of February of 2020. I bought a 1920S, 50-cent Walking Liberty half dollar in MS 64 plus condition that was CAC stickered, graded by PCGS. I paid $4,600 for that coin. Now, here's an interesting rub for you guys all to ponder. That same coin in MS 63 condition is sitting on Heritage Auctions right now in one of their auctions that is coming up over the next month, and it's sitting at $2,600. Why didn't I go after the $2,600 coin? Why did I go after the one that I paid $4,600 for? The answer's simple. When I look at the population reports, there's too many of that coin in MS63 condition out there for me to consider it an investment grade collectible. So, rather than taking $5,000 or $6,000 and buying 2 lesser coins. I chose to spend $4,600 on one coin that I truly know is investment grade. That's what you guys got to understand. This is something that a lot of sophisticated investors that come from the financial markets and enter into the antiques and collectibles trade still don't understand. Again, to go after an investment grade collectible or antique, you have to be in the top 15% of the marketplace. It's just like if you want to build a portfolio of Morgan silver dollars, and you're going after a lot of these Morgan silver dollars in MS63, MS62, or even in some cases MS64 condition, I'm sorry, you're not in the investment side of the trade yet. You hit the investment side of the trade when you're investing in Morgan silver dollars, if you're going after the Carson City issues, pretty much at MS65. So if you're buying MS62, MS63 Morgan silver dollars and calling it an investment, it really isn't. It's more of a speculative bet. And if you look at the price history of a lot of antiques and collectibles, you'll see when markets move up, it always benefits the top tier collectibles, meaning the collectibles that are highest in grade for those particular items that are moving up in value than it does on the lower end of the equation. This is how a lot of people were able to make money in vintage comic books when the market blew up over the early to mid 2000s with Marvel introducing the Marvel Cinematic Universe, DC coming out with their movies, and a lot of investors entering that market. It's just like I'm going to give you a tip. A lot of you guys that are going after grade at video games, if you're really going to take the risk, you're going to go after grade at video games, by all means, at least collect video games that are factory sealed in 9.2 or higher condition. Try to get in on the higher level. Don't go after an 8.5 factory sealed copy of Legend of Zelda from 1987. Go after a 9.4 copy of The Legend of Zelda from 1987. That's factory sealed. This is something that a lot of collectors, speculators, and investors do not understand. It's just like I get questions all day long where people ask me, Sean, I understand that Pokemon is extremely risky, but I want to go after a first edition holofoil Charizard card. Do I get it in PSA 9 or do I get it in PSA 10? My response is always the same. If you are buying for long-term investment and you really believe in this market, which again, I consider it very speculative, but if you do believe in the Pokemon market, go after the PSA 10 card. Always, the rarer, the minter, the better. That's what you gotta understand. The antiques and collectibles trade is opposite when it comes to diversification than the financial markets. Now, there is one exception to this rule that I gotta talk about. Let's say that you are building an investment grade portfolio across different genres of the antiques and collectibles trade. You cannot put all your money in one collecting category. That is stupid. If you are building a portfolio of antiques and collectibles, you want speculative markets in there, but you also want established markets like coins, currency, artwork, first edition books, antique furniture, antique glass, and traditional antiques. Items that will pretty much stabilize your portfolio overall. It's just like if you invest in financial assets. You can't put all your money in Facebook and Tesla stock. That's stupid. Those companies are not established. You have to have access to companies like Dow Chemical, AT&T, GE, other established companies that have been out there performing for the last several decades, if not hundreds of years or more. Collectibles and antiques work the same way, but there is a nuance or an indifference of the rules when we talk about diversification in the financial markets versus that of the antiques and collectibles trade. I hope this video has served you well. If it has, please consider liking or subscribing to my content. Please also leave me a comment below if you'd like me to do more videos on this particular topic. Thank you, and have a good night.